Hello, YouTube. Today, Jerome Powell moved the stock market. So what did he say? Why was he happy? And exactly what do we need to know going into the rest of the week? We're going to pick up where we left off yesterday, focusing on 410.64 and 408.16, which is our January high and our February low going back to 2021. Let's look at our 15-minute chart and see what happened. So yesterday, when we uploaded the video, we were stuck inside this range of the pink line versus the red line. We danced around it quite a bit. Dancing, got above it this morning, failed breakdown below it again today, and now we're over. We're currently at 413.64, or roughly 1% above 410. That's right, about 1% above 410, or a cushion above our what was supposed to be a red line that's not holding here. If you remember, too, what we talked about on the weekend, we were talking about a weekly level. And as of right now, yesterday we backtested our monthly area at 408.1. Today we got a failed breakdown, 407.56, and we're holding. This is now actually a bullish engulfing candle, which means that the low is lower than yesterday, the high is higher than yesterday, and we've engulfed the entire bar or eaten the range from the previous session. We still have about an hour to go before we actually close, but I want to get this video out to you as soon as possible. So here's what I'm noticing. I'm noticing that now that we're above yesterday's high, we also have to battle for 41367, which is going to be a really important area for us here. We have had sellers come in, and we see that on the 15-minute chart, which gets smoothed out here on the daily. So we got a higher high. I'd want to see another daily higher high tomorrow if we're due for fresh expansion. And the reason why is because when we look over here to the NASDAQ actually held a higher low, which means that sellers came in, but buyers stepped in higher than they did yesterday by 10 cents. So we saved our low from yesterday by about 10 cents. We got a daily higher low and a daily higher high. So there is no bull engulfing, but this is actually even more bullish because we actually got a true test today. So what did Jerome say? And let's go through that now. But just keep in mind that we're still forming a very large W here. So until we lose our primary uptrend going back year to date, we have to assume that the bulls are making some momentum. And from the weekend, we also talked about 314 and 315 for that key area. So if you want to watch that weekend video, I encourage you to click on the link in the description or in the top comment. And for the S&P 500 here, we're still completing, a large W. We're closer to the top of the W now than not. But as of right now, things look pretty good. So at the very end of the video, I will give you my exact walkthrough for what I'm looking for the rest of the week as an update to our weekend video. Here's what I noticed today. Jerome seemed happy. He had a message that it's getting easier and easier to tell. And I'm noticing that this guy seemed happy, calm, cool, collected, which was the exact same thing we saw from Jerome last Wednesday. So when the same Jerome shows up, calm, cool, collected, it seems like he's confident and not very much changed about what he actually said. So remember, the stock market is a future discount mechanism. So if on Wednesday we were told, hey, maybe we're going to change. Yes, well, that was like last Wednesday. That's all the way back here when we had a low at 402 and when we had a high of 41367. So if we can reclaim that 41367, which we're digesting right now, that's the Powell high from the FOMC when everyone's like, oh my God, we're oversold. There's so much greed in the market. He has to squash it. Here we are. Here's where we are. I think Jerome understands what he's doing. And I went through a little bit more of a discussion on our private stream this morning with our members. But anyways, moving forward. So Jerome seemed happy. That's the first important thing that I saw here. David Rubenstein is the CEO of the Carlyle Group. He's been around Wall Street for a really very long time. And here's what they did. They created a rally to start the interview off on, which means he knew he had to deliver a little bit of a hawkish message. So they rallied it up hard, gave him a nice little softball. Hey, that payroll number, what did you think about it? I wouldn't have changed. Whoa, market went off to the races, right? Just pumped up so hard, so fast, so beautiful, so majestic, and then reverts immediately on the close of that 30-minute bar. So we have a lower high, we have a higher low, inside bar, boom, bear break, then we come back up and save it. But anyways, what that tells me is that they understood. Both of these guys are lawyers. They speak eloquently compared to previous Fed speakers. And what I heard Jerome say was more of a balanced approach, but nothing really new. So he knew he had to deliver that sour reaction, but he gave himself that cushion that he could actually sell into. So that's what it looked like to me. He came out happy, calm, cool, collected, like we saw last Wednesday. His demeanor was good. Key takeaway for me is this. The word disinflation works magic on stocks. Yep. that word disinflation. Fed is almost done. We're looking to pause. We're looking to pivot soon. Sorry, not looking to pivot soon, but what the market does again as a future discount mechanism is it says, yeah, I know what you're saying, and I understand that. I'm going to discount the future now too. And as high as you thought we were going into Powell last Wednesday, we've now come back down to 408. We bounced off our monthly low, our monthly high from January, sorry. And now we're reversing back up. So I understand that people want to sell the greed. It's just like, well, let's look back in time. Like we haven't been in greed for like a year plus. That's why we have our primary downtrend on the daily chart. Why? Because it's been so pessimistic and so bearish for so long. There hasn't been any greed into here. Not very much, not extreme greed. Why? Well, every time we went lower. So I think that Jerome's like, yeah, well, the market has a different job than we do. Moving on. Screw your puts. That's what I heard from today. Why? Well, because the world is leveraged net long. They're not leveraged short. Institutions, including the Federal Reserve, the U.S. government, and like banks, they don't make money when things go down. Why? Well, that's when things get bad. And we talked about this before where it appears like we're going to avoid a recession, at least starting in the first half year. Oh my goodness. WTF updated today. We're going to have 2% GDP expansion into Q1. Okay. Whoa. That's pretty strong. So I'll have to think about that. Drop me a comment and tell me what you think about it, though. That's a pretty big number. We'll see if Jerome's still laughing. He gave himself opportunity. Here's where we are. Here's a different thing that I think might be helpful. Instead of just looking at the that last chart we had, the psychology one, here's where we are. Right now, we're almost at the top here in performance chasers, right? Profit takers, premature eradication. We're climbing the wall of worry after the slope of hope. So where are we likely going to go? Well, let's look and see here. So we climb the wall of worry, and when we get to the top, there's actually things to be excited about, like Microsoft announcing AI today for Bing search, Google up 3, Meta up 3, NVIDIA up 4 as the leader of AI. AI seems like such a big buzzword right now, and everyone's excited about it. So Microsoft's nearly joining the double-digit club. It is up by 9.88 year to date. You go, Microsoft. You go, girl. And now as we look here to Joe Biden speaking tonight for the State of the Union, I don't know what he's going to say. That's kind of like the last thing right now for this week that I could see is the wall of worry. We heard about the balloon. We heard about Jerome. We heard about earnings. We heard about whatever. And when we look to something like a Microsoft, what's so interesting to me is that it's actually breaking over multi-month. I think this is actually a weekly chart. Yeah, it is. So when we look here, okay, well, claiming the 50, it's now only joining the double-digit club year to date. That same W forming here that we talked about, second biggest stock in the entire stock market. If it wants to go up, like it's doing it. It's over last week's high at 26469, which means expansionary territory, which also means that it wasn't a sell on the rumor of their AI. It gapped up. On Jerome Powell, it just went up more. Oh, wow. And it's currently over last week's high on one day, going up 4%. This is a $2 trillion company, right? That's a lot of Benjamins. Jerome only makes about 180. So let's see what Biden says. And let's not forget about all right, here's my tradable action plan. So for right now, I have what I would call bumper guards on my account, which means that I'm not confident right now which way we're going to go, but I'm confident that as long as this pattern holds, got to give these bulls a chance. Got to give these bulls a chance. They got to get us above 415, we have to get above 41832 this week to print that weekly higher, the pattern we looked at on the weekend where we have a higher low and a higher high. I can also note we're bouncing off the 2018 and 2020 tops here because I see my blue line. And we got increasing volume so far. So this looks like pretty good. If I said this wasn't SPY, I'd say, man, the chart looks pretty strong. It's reclaiming a short-term price, wants to go up. We got a golden cross here. We talked about on the weekend too. Golden cross or strong support at mid 390s. And we got our 50 weekly at low 400s. Man, that's strong. It's strong until it isn't, but pattern's holding. The W was almost there. We've completed our first wave on on QQQ for the W. Looking to see if we push up to about 332. Okay. Now looking here to the dollar. Here's where I understand what the bears are going to be seeing. I understand. It's just like maybe you don't understand U.S. excellence, which means that the U.S. is still the best in the world, right? Everyone wants to be involved with America, which means they want the dollar, which means they want U.S. tech. They want U.S. That's what they want. And when we look here to the daily chart, yeah, like it broke the falling wedge or the channel lower. It's digesting its 50. It's flat on the day by 0.2. It's up by zero point 0.4 on the week. And let's look to SPY now. The SPY should be down the exact opposite. Yeah, SPY is down by 0.4. So we go back to DXY. DXI is up by 0.4. S&P is up by 0.4. So maybe one of those will mean revert or fix itself. And right now, DXY is battling for a major trend change. I pointed this out on the weekend. Right, there's our low going back to 2021. There's every bounce off it before. It leads to its big move higher. We have like a double head and shoulders inside of here. It's trying to reclaim its uptrend. If it can get above its short-term price or the 50 MA currently at 105.16, that means it wants to break the pattern and go higher, maybe form a cup and handle or something. But until it claims 103.65 on a weekly close, and then also gets above the 50 MA and really 106.56, it's staging a reversal. This is what we call a dead cat bounce. Why? It hasn't even taken out the relative lows. So if it can't take out the relative lows, how's it going to take out the highs? It won't. That's just how it works. VIX is up by 2.5% on the week, still in the teens though. Anything below 20 is a low reading for the VIX. So until all those things change, I have to assume that what we laid out on the weekend is what is materializing here. That video should now be queued up, and I encourage you to watch it. If not, I look forward to seeing you tomorrow. And thank you so much for tuning in.